Good afternoon. Hope you guys are doing well. You know, we've been hiring younger and younger staff, and they've been wearing us out to try to get us to use video instead of the written word. So we're going to give this video a try. I hope you guys are doing well. Everybody's staying safe and coronavirus free. You know, it's been an interesting few weeks. We've had a lot of market volatility. So we just kind of wanted to reach out and touch base with you, tell us what we are thinking, kind of go over some of the moves that we intend to make or have made. In the last couple of days, we've seen about a 10% pullback in the market after one of the biggest run-ups in history that occurred on the back of the government stimulus from the PPP loans and just flat out sending money to people, to Americans. I think that all that stimulus, you know, finally provided some confidence and seemed to work, and markets shot up once they finally bottomed out. In the past, when that happened, and kind of when fear was at the highest, we rebalanced and put money to work, bought low, and then those trades did really well. We've held back about 10% cash, and we've been asked why we have that cash in the accounts. We got that cash from selling bonds. Whenever rates go down, bonds tend to go up, and so the bonds were up, and so we put that into cash while fear was high, knowing that we'll eventually put that to work. And we've been kind of dollar cost averaging it in a little bit at a time. As markets have run up, we've just kind of been hanging on to it, just kind of waiting to see what happened with the outbreak. You know, now that people are back to work and interacting and the government stimulus is almost over, we just kind of wanted to hang on and have a little bit of dry powder to put to work. One of our clients manages about $1 billion loan portfolio of mortgages for mostly self-employed people. And in talking to him, he said that literally 1/3 of his loans were currently in forbearance. And, you know, between that and some of the other problems that are out there, we think that this is going to take a long time to happen, to work through the $10 trillion in debt now that we have. And so we've got this initial bounce, and, you know, it seems like sentiment has flip-flopped in the last couple of days, and now it's turned negative again. And I suspect it'll flip-flop a few more times before it's all over. But please know that we think that diversification and keeping costs low will work over time. We're going to continue to buy into any fear that exists and put money to work when people are scared or whenever markets fall. And so we're going to stick with the investment plan. If you have any questions, please don't hesitate to call us. We're always here ready to talk to you at any point.